Hello, I'm Milena Mileva, one of two managers of Baillie Gifford UK Growth. In this webcast, I will briefly recap what my co-manager Ian McCombie and I are trying to achieve, make some observations on how our portfolio companies performed over the last year, and introduce a couple of new holdings we have purchased. Further information on the trust, such as a copy of the recent annual report, can be found on the website. So let me kick off with a quick reminder of the key aspects of our investment approach. Ian and I are trying to generate long-term capital growth from investing in a concentrated portfolio of carefully selected British businesses. We are growth investors, which means we look for companies whose large, long-duration growth opportunities we think are misunderstood by the market. We have a long-term time horizon and aim to hold companies for at least 5 years, rather than trading in companies on a short-term basis. We do so because we believe that it is only over longer time periods that the superior competitive and cultural strengths of the growth businesses we invest in will emerge as the dominant influence on returns. In keeping with this, in the last financial year, portfolio turnover was a mere 3%. Finally, we believe that constructing a portfolio which is very different to the benchmark is a necessary, though not a sufficient, condition for outperformance. We are guided by where we see the most attractive investment opportunities, rather than picking companies because of their size or the industry in which they operate. Active share is one often used measure of portfolio differentiation and is high at about 85% for your portfolio. Now, reflecting on the past 12 months throws up a strange mixture of emotions and observations. On the one hand, enduring the dreadful health and social impact of the pandemic has obviously been terrible for so many. On the other hand, and whilst it feels almost inappropriate to say so, this past year has been a remarkably buoyant one for investment markets, and indeed for your portfolio. On the whole, most companies proved resilient in what were exceptionally challenging circumstances. And for a fair few of your holdings, the pandemic has only served to accentuate existing beneficial trends. Pleasingly, Performace also came from a diverse number of individual stock ideas. For example, the online luxury goods platform Farfetch saw a real inflection point in demand for its products, grew its customer base rapidly, and achieved record revenue. Importantly for us, looking ahead over the longer term, we were excited about some strategic partnerships the company managed to strike in this period, notably the one with Chinese tech giant Alibaba and Swiss luxury goods conglomerate Richemont. We think this tie-up helps further validate Farfetch's position as the leading online luxury goods platform globally. Perhaps more surprisingly, and despite a variety of regional lockdown restrictions, Ashtead, the industrial plant hire and rental business, showed encouraging trading and grew revenues within its specialty division. This illustrates the successful execution of its long-term strategy, which has been focused on diversifying its end markets with new product areas, such as, for example, floor cleaning equipment, where the concept of renting is still relatively new. We think that this strategy has not only served to reduce the cyclicality of the business, but also strengthens Ashtead's long-term competitive advantage. As mentioned, turnover has been very low, reflecting the fact that the long-term investment cases for the vast majority of your holdings remain intact. We did, however, make two new purchases. We took a holding in Experian, the credit information provider. This is a business we know very well and have long admired for its strong growth track record, attractive financial characteristics, and capable management. We think that both the scale of Experian's growth opportunity as well as its competitive position have improved substantially over the past 5 years. We are particularly enthused about its ability to build a large direct-to-consumer business, especially in the US and Latin America. We also initiated a position in Lancashire Holdings, a specialist insurance company. It writes commercial insurance risks and has an outstanding track record of profitable underwriting, in stark contrast to many in this industry. Now, in recent years, insurance pricing has been falling, but Lancashire has been disciplined, and until late last year was happy to shrink and wait until industry losses became unsustainable and insurance prices improved. That moment had arrived, and we decided to take a holding, which we then increased when Lancashire raised more equity capital to take advantage of the improving pricing in its markets. After careful consideration, we took the decision to sell out of Rolls-Royce and Mitchells & Butlers. And we think that for different reasons, both are unfortunately in the small minority of companies we own that are likely to emerge weaker from the pandemic, with their longer-term growth prospects much less appealing. As noted in the Chairman's statement of the annual report, we would like to request permission from shareholders to have the ability to invest in private companies. We see the private company space as a really interesting area to find exciting growth opportunities and contribute to the long-term performance of your portfolio. The backdrop here is that a lot of businesses in the UK as well as elsewhere in the world are choosing to stay private for longer. We believe that the permanent capital structure of an investment trust provides the ideal vehicle for us to access such businesses. In reaching this proposal, we have spent some time tapping into the expertise of Baillie Gifford's private companies team, who have assessed over 1,000 private companies in the past few years, 180 of which were UK businesses. Now, to be clear, we see this proposal as simply widening the scope of your investable universe, and we would impose a 10% limit on our exposure. We also have no strong desire to buy any private companies unless compelling individual opportunities present themselves. As we turn to the future, the only thing we can note with near certainty after recent events is the folly of precise predictions. Some aspects of consumer and business behaviour may well, hopefully, go back to normal. But we also recognise that many patterns in the way we all work, travel, shop, consume and interact have probably shifted irreversibly. We remain confident, however, that your portfolio is populated with some great UK businesses. They're well positioned to emerge strongly from the pandemic and with the potential to deliver superior growth for many years to come. If those businesses can execute on that potential, then attractive long-term returns will follow.